to the channel where I talk about things. And today I'm going to once again talk about Bitcoin and crypto and the markets in general, and to let you know that all is not as it seems, which you may have noticed in the last number of months. As I've been telling you and continue to tell you, what we're seeing in what is the supposed sideways chop, right? It's from the all-time highs down to like the lows we had last week in the sub 50K range, and then back up to the 60K range, and now in that area, plus minus a bit. We're seeing basically that there's a lot of buy pressure and sell pressure, and buy pressure and sell pressure, right? That's what drives markets: buy pressure and sell pressure. That's all chop is. And chop is just a convenient way of saying that for people who don't necessarily understand volatility, entropy, probability, and statistics, which those are the relevant maths that run the markets. So why anybody would bother to trade in markets that they don't understand the relevant maths of? Well, I wouldn't say it's beyond me, but it is interesting that so many people continue to enter markets and allow themselves to be duped. But of course, the reason is that they're being misled, they're being deceived, right, by essentially the scam that is the financial system. And yes, I call it a scam because in many ways that's exactly what it is. Right? When you have tens of millions of people trying to trade assets, and the vast overwhelming percentage of them lose, like more than 90%, like 99% of traders lose money. Right? The rule of thumb is 90% of traders lose 90% of their trading capital within 90 days. So you open up an account, you put in $5,000. That's like typical. Anywhere from like $2,000 to $10,000 is normal, and $5,000 is like the average. Typically, those accounts get wiped out within 3, 4, 5 months tops, and people basically lose the 90% of it within a few months, and they just slowly bleed out the last 10% over another month or two, sometimes longer, whatever, but they generally lose. It really is a tiny fraction, like less than 1% of retail traders that actively trade that manage to be consistently profitable. And that's because of the very simple reason that people use bad information and make bad trading decisions, like using leverage to get into positions that they shouldn't be into, and then they get out of positions when they shouldn't get out of them. They should have gotten out before. All right? They did not take their profits early and often. They did not limit their losses, and or they were emotionally attached to their trades. Those are the three things that cause traders to lose their trading capital and to be losing traders. And this causes significant problems for the capital markets. However, those markets are led by gigantic corporations that control the markets because of the size of their positions, the amount of liquidity they have available to basically move markets the way they want, using the highly relevant maths of the VEPs to move the assets to whatever direction and position they want before taking their profits, and then do the next trade. And very often they run trades up and down, up and down, up and down, continuously all day, 24/7, using their incredibly powerful bots. And that's how they wreck the average retail trader, who's in a usually bad position to begin with, as I said, with leverage or other silly things like stop losses that are marked exactly where the exchanges know they are, because obviously if you enter a stop loss exchange, they see exactly where it is, they know where your pain point is, and they can drive the price down to that area or up to that area and take your money. So this problem is exacerbating the bigger problem, which is the lack of confidence, the growing lack of confidence in capital markets to begin with, and in the whole capitalist system. And no, I'm not against capitalism. I am against pretend capitalism, which is what the markets currently are. They're so regulated and so controlled and so rigged to advantage those who have against those who have not. If anything, it should be the other way around. You should be giving more advantages to those who don't have, so that they can win a bit more. Not win necessarily, not rig it to their favor, but make it an equal playing field. But that's not how capital markets work. They're driven by money and greed, so they give advantages to people who have more, which is, of course, antithetical to capitalism. It's supposed to be a meritocracy, right? You earn what you earn. You win what you win. You make smart decisions, you win trades. You make not very smart decisions, you lose trades. But it shouldn't advantage people who have more money just because they can afford to pay for things like order flow, etc. And this causes massive problems because it creates a huge lack of confidence in the capitalist system, because those who lose, understand, comprehend from their point of view that it's not an equitable system at all. And that all it really does is to give more to those who already have everything by taking away from those who already don't have. Now, you could say, well, this is just normal. This is how the markets operate. This is how they continue to exist. If we didn't have this system in place, capital markets would die. To which I say that's balderdash. That's bollocks. That's not true. Right? If you give people an equal footing and you don't advantage those who have over those who don't have, then you would actually still see the capital markets survive and thrive. And in fact, they might even survive and thrive more, because you'd have more people with winning records able to participate for a longer period of time. That, of course, is not the goal of the capital markets. Their goal is to take everything that you have and put it in their pockets. Anyway, happy news on that end. Happy trading. See you later.